Hello, everyone, and welcome to this Tresle webinar. My name is Joel Keeler. I'm the CEO of Tresle. I'm very excited for this presentation today. Before we get started and I introduce today's guest, I want to give a brief overview of what we'll be covering today. So in this discussion, we'll be talking about the importance of human capital, what it is, why it's important, both when pursuing an acquisition as well as operating a business, as well as looking at kind of a little bit of the practical tips business owners and perhaps prospective business owners can put into play right now that will reflect long-term in the success of their companies. So with that, let me introduce our guest today. So joining us today is Atta Tarki, founder and CEO of ECA Partners, a data-driven executive search, interim management, and staffing firm. Based in Los Angeles, California, ECA primarily supports private equity owned, venture capital owned, and higher growth companies with filling C-level positions. Atta is a thought leader and a regular contributor to the Harvard Business Review, Forbes, and other top publications. He's also the author of the book, Evidence-Based Recruiting. Thanks for joining us.
Thanks for having me.
So this is an interesting topic and one that I'm excited for today. So maybe if we could start off, tell me a little bit about yourself, your background, and how long you've been involved in talent sourcing.
How many hours do we have?
There you go.
No, so I started my career in management consulting, and I did 6 years of that. And then 11 years ago, I left consulting to start my company in talent sourcing, specialized talent sourcing company called ECA Partners. And we developed our own methodology for sourcing and evaluating talent. And that's what culminated in the book, Evidence-Based Recruiting, that was published by McGraw-Hill last year.
Nice. And prior to that, consulting, where were you based before?
I was born in Iran, but I grew up in Sweden. And I started my career in Munich, Germany. And I moved to Los Angeles back in 2006. And now I think I finally found home here in Santa Monica.
Nice. Well, it's not a bad place to be, right? So, today's discussion is going to be about human capital. I guess you could probably find a bunch of different definitions, but how would you define human capital?
Yeah, I think human capital is particularly relevant for the discussion we're having today about entrepreneurships and businesses. And when I talk to a lot of people who have ideas and dreams about starting a business, they keep focusing on, I don't have enough capital. And I ask them, what do you mean by that? And they said, well, I don't have enough money, cash. And I understand that. And then if you go back, way back 100 years ago, et cetera, the main barrier for someone starting a business might have been access to money and the capital they had. But as we've evolved as an economy, more and more of the capital in the business is the know-how, the knowledge, the skills that business has. If you look at the average US company, about 54% of their cost today is not going to buying machinery or other kind of like raw materials or other items. It's salaries and wages. 54% of their costs are salaries and wages. So they're paying for that human knowledge to come in and interact and create the future of the company, if you will. And human capital, the way I would define it, is the combination of all the skills, knowledge, and traits, and even like I would put in willpower in there that you have as a person. Yeah.
Thank you for that. So you mentioned starting a business or pursuing potentially buying a business as cash or capital in the traditional sense, call it being a barrier. Potentially when pursuing an acquisition, why should a potential buyer care about this?
Yeah, so when I'm talking to potential acquirers of businesses, I see a lot of folks focusing on trying to get a great deal and kind of like finding a business at a great price. And what I tell them is something that one of my mentors taught me. which is I'd rather find a great company at a reasonable price than a reasonable company at a great price. And what I mean by that is a great company to me is something where I could use my human capital or the human capital of my team to add substantial value to that business. Now, if I buy a company at a great price where I don't need to use a lot of capital, let's say, but I can't really add that much value to it, it's not going to be that good of a deal for me, but it might be a great deal for someone else.
Yeah, totally fair. And you're touching kind of on my next question. So like oftentimes I would say buyers, investors get it kind of caught up, I would say, kind of in what they're comfortable with, but also kind of the follow the trends, if you will, versus really focusing on investing in things that they feel they can, roll up their sleeves, maybe literally or kind of figuratively, and personally impact in one way that outcome. Why do you think so many people kind of don't take that approach potentially and focus on and get stuck riding those waves?
Yeah, we live in a narrative economy where it's easy to kind of like get caught up in a narrative of something being a cool trend or something that a lot of people care about. But if you look at some of the most successful investors, that's not how they operate. They pick untrendy industries or untrendy businesses, and that's where they make a lot of their money. And I think thinking about it, not in terms of kind of like, oh, this is going to be the next big thing, but thinking about it in terms of what is it that I could do that could be a good use of my human capital, because that's the biggest capital you're bringing into the business, not just the cash you're bringing into the business. And how can I add value to this business using my human capital? That would be a better way of looking at it.
Yeah, and well, thank you for that. And I guess in terms of doing that, what are kind of some areas that people can recognize, that maybe that some of the little bit more intangible things, potentially the current team of a business that you're looking to acquire. You mentioned kind of bringing your own, the buy side, bringing their own connections team themselves, all that kind of stuff. But, when looking at a company holistically, there's a lot of things I think we can both agree that kind of between the cracks of, a P&L and balance sheet and kind of those tangible things, what are kind of some areas that buyers can look to recognize the intangibles in a potential investment?
Take a look at all the various opportunities you see with this investment. List them by kind of like low-hanging fruit or things that might take a little bit longer time to implement. Try to kind of like chart out in front of yourself how much of that you think you can impact and you're taking a bet on yourself. How much of that are you confident that the current team can get you there on? And how confident are you on that? Oftentimes when you're buying a company, you don't know the team very well. Sometimes you do. Sometimes you're buying into a company where you know them extremely well. But what if the team doesn't have the human capital you want? And again, I include willpower into that, or even just kind of like the sheer will of wanting to do something. Just because a team has the knowledge to do it doesn't mean that they're motivated to do it. And when you're coming into a situation where it might be a cultural turnaround situation and the team's not motivated to get you there, it might be really difficult. So understanding that, and sometimes I hear a lot of companies kind of like thinking about making an acquisition where there might be synergies down the line. Oh, if we just kind of like add this to our product portfolio, we'll be a bigger company and more attractive to our customers. One of the things I tell folks, and before I moved into this space, when I was advising companies on M&A, I would say that think about it this way. Most people who buy a company, if you tell them or ask them like 5 years later, 10 years later, where did you get most of your wins? They say it was in things that I was able to implement in the first year. So don't think about kind of like that long tail of in 3 years from now, we will be a bigger, better company together. But think about what are the things that I'm in control of implementing in the first year and focus on that first.
Yeah. Yeah, absolutely. Maybe you could provide an example about, kind of how taking this approach was successful.
Yeah. I recently invested in a company called Bulletin. So here in the US, you typically say The Bulletin because it's a newspaper company. And the creator of a company was a person who's been active in the Swedish media for over a decade, I'd say close to 2 decades. And he had come to me with some business ideas in the past, and I had taken a pass on investing in those ideas because I felt it wasn't as close to his knowledge. But when he came to me with the idea for Bulletin, I definitely decided to invest in it. And within the first month of this company launching in Sweden, and that was on December 22nd, I believe it launched, it went live. Bulletin had about 500,000 unique visitors on its website, and it had 7,000 paid subscribers. And this is a newspaper that didn't even have a paywall the first month. So the paid subscribers were getting exactly the same product as the non-paid subscribers. But it was a massive hit from the get-go. And that was because I knew that this person had the know-how and human capital in that specific space to make it a success.
Nice. Yeah. And maybe you could outline for our guests, a situation where that potentially wasn't the case. It doesn't have to be in your investment, I guess, portfolio, but maybe so as like people that you've come across in professional or just an example in general.
Yeah. Most of us know a person who have started a restaurant or apparel retail shop or gotten into some other business where they don't really have a huge expertise. I have a friend who had an opportunity to buy into a mechanic shop and bought up the mechanic shop. Unfortunately, that mechanic shop doesn't exist anymore. He had never been a mechanic before in his life. And that's kind of like, I'd say a lot of these hobby chefs or people who are very good at making meals at their home or just enjoy doing that or think that they're going to enjoy the restaurant lifestyle and get into that. That is a recipe for disaster. And if you look at the research, it points to entrepreneurs who are successful are folks who have at least 6 years of experience in that industry. So if that's what your dream is, to buy a restaurant, let's say, my best advice is go and work in a restaurant for a few years and see if you, first of all, enjoy it, but then also learn a lot of the other things about running a restaurant. A restaurant is much more than just having a menu. Learn about scheduling staff, learn about how to kind of like motivate team members when they're having kind of like a bad day or when it's slow for a couple of weeks in a row and they're not getting a lot of tips, and a bunch of other things that goes with it.
Yeah, absolutely. So kind of taking a step back, generally speaking, I guess from the talent acquisition point of view, what's kind of the most that you see potentially at ECA or prior experience, the most common misconceptions people have about this topic?
I would say it's one-dimensional thinking. When they think about talent, they think about someone being good or bad, or they think about good talent versus bad talent. And this person is a superstar and this person is not good. And I would say that it's instead of thinking about it instead of in a one-dimensional way, good to bad, think about it more as a circle, and you could be good in so many different directions. And finding that good fit is so much more important to your company than finding great talent. So a lot of folks kind of like talk to me as well. How does Google hire all the superstars, or how does Netflix hire all the superstars? Well, they're also hiring people that are a good fit for their company. You shouldn't try to hire Google engineers just because you can, or that might be a good strategy for Google. You should hire the type of engineers that would be a good fit for your company.
And culturally too, right? Because there's kind of an element that you can probably develop the skills in house if you have somebody that is kind of sees the vision and is motivated in that respect as well.
What you're pointing to is extremely important. And when we say culturally or company culture, sometimes that can be this kind of like fuzzy term that's a little bit difficult to define. But bring it back to what are the types of behaviors I like to see in our company, and what type of behaviors are a good fit versus not. Well, a lot of folks kind of like use kind of like vague terms to define the company culture. Like, well, we work hard, but we also play hard. Okay, well, what does that mean to your company? It's how often are you going to be in the office post-COVID? How many hours do you work? How much time do you spend together in meetings? How, when you say you're collaborative, what does that really mean? Does it mean that you're going to be standing over the shoulder of the employee and checking in with them every 5 minutes? Or does it mean that you leave them alone and they kind of like report back to you when they feel like it? Because both things could be positive to various folks, but kind of like trying to define the behaviors that constitute that company culture that you're trying to create or you've already have created is really important for finding that good fit.
Yeah, interesting. And you know, we touch on talent a little bit. You know, today we're moving, you know, in such a fast pace, and you know, I'm sure it will be the same, probably even more so 10 years from now or what have you. But you know, within the tech industry, for example, you know, kind of the half-life of a set tangible skill is less than 5 years. So new owners or prospective owners, if we're talking about acquisition, you know, how can they work to get the best return on their investment when things are moving? So maybe we're talking about skill development. Maybe we're talking about, you know, people wanting to find that cultural fit. So maybe you could touch on that a little bit.
Yeah, absolutely. Map out what you're trying to achieve. To quote one of my favorite philosophers, Alice in the Wonderland, when she was having a conversation with the Mad Hatter, and asked the Mad Hatter, where does this road lead? I believe the question back was, well, it depends where you want to go. And it's a little bit the same thing. If you just go out there and try to accumulate skills and say like, oh, well, it's great to be able to know machine learning and AI, and let's go and put everyone through this AI and machine learning course, it's not going to be super helpful to most companies out there. But if you kind of like start with understanding where this road leads and what you're trying to achieve, then you go back to what are the skills we need to achieve that? Which of those skills do we already have in-house? And where do people want to? Where are they excited about using their skills to get us there? And what are the gaps we have? Then you could start filling for those gaps. Maybe you don't have any gaps, great. Then start driving in that direction. And that's a way where you could kind of like use those kind of like skills, because you're correct. Skills are a perishable good. And if you don't put them to use, 5 years from now, they're not going to be that much useful to you.
Yeah. And you make a good point in terms of, you know, I guess looking at companies, skill of an individual operating the company as well as in an acquisition, and looking at it through a lens that, you know, you do have a finite time, right? And developing people is potentially an important way for people to kind of sustain that long-term success. So let's take a step back from, I guess, acquisition mode, if we want to call it that, and look at, you know, the operational side. So, you know, in addition to ECA Partners, you also are involved in a fund called Noble Investments. You're the chairman. You invest in, your team invests in kind of well-built, lower middle market owner-operated companies. And we can definitely maybe touch on that. You know, that's a mouthful, but I guess specifically to operating a business, I think it's fairly well known that investing in your team kind of leads to, you know, better culture, you know, better recruitment later on, higher retention, more engagement. But, you know, maybe looking at smaller companies that don't have that kind of HR department, for example, how can they get started investing in human capital and maintain it?
What I typically say is that employees don't really need 12 different flavors of sparkling water to be happy. A lot of employees join a company because they want to help the company achieve what it is achieving, or they want to put their skills to use in a very specific area. And the best perk you can give your stars, who really are at your company for the right reasons, is to hire more stars, because that will motivate them, and they're kind of like working with peers that are raising the bar and helping these stars become better at what they are. And on the flip side of that, one of the most demotivating things you can do to these stars is to hire folks who don't care about their job, but try to motivate them through setting up a coffee shop at work and thinking that magically through that coffee shop, now people are going to be happy and work harder.
Yeah, interesting.
So focus on the core mission of your company and focus on having people there who actually want to be there for the right reasons and provide them the tools to do their jobs. And then within that context, also do ask them, what are their areas where they do want you to invest in the talent and in their skills? And maybe folks will tell you things that will surprise you.
Yeah, interesting. And it's also to your point of like kind of seeing that roadmap and then kind of dialing it back to fill different positions along the way. That's interesting. I guess flipping back to acquisition mode, what are some tips you can share on kind of, when you touched on a little bit earlier about kind of coming into an organization and maybe not knowing the team as well. So we're talking post-close, post-sale. What are some tips on how new ownership can approach their employees? Is there a need to be sensitive? Or maybe people feel that this is new, has never been done with the previous owners. A bunch of small changes could make people feel uneasy.
Yep. Well, I would say it really depends on the skill set and the style of the new acquirer. Because if you don't take that into account, the equation is not going to work. But if you are a little bit flexible and you could have a few different approaches, what I recommend is start by understanding what the employees want and understand what each individual, not as a group just, but also sit down and talk to as many of the individuals as you can and try to understand what each individual wants, what are some of the things they would like to achieve with their career at the company, what are some of the things that the past owners did well, what are some of the things that the company could do better to support them, and listen for the folks who are not just saying we should do this as a company, but people who are willing to raise their hand and say, well, if I get the resources, I will do this. Because those are going to be the most important in the first few months of piloting new initiatives and showing that it could be done a new way. And let's just take one specific example where I've seen this happen a lot of times when private equity firms come into new companies. They try to kind of like boost up the productivity of the sales team. And the bad example of that is to come in and set up new broad goals and metrics for the entire sales team. And oftentimes there becomes a huge kind of like organ rejection there, and people don't want to have to do with the new owners, and they become very skeptical to the new owners. A good way of doing that is listening to the key sales folks, seeing who on the sales team is really motivated to increase their targets and also their pay, of course. And how can the company support them, those specific individuals. And out of the 20 different ideas they could have on how to kind of like achieve better sales, what are the 2 or 3 ideas that these individuals are most receptive to? If someone needs more help on setting up meetings, great, give them a meeting scheduler. If someone needs more help on the marketing materials they take with them to the meetings, great, give them some help on that front, etc. But by getting those 2 or 3 individuals who are willing to pilot these ideas and demonstrate success, you'll get more excitement from the rest of the team and show that, yes, we can help you be successful. We're not just here to kind of like be a sweatshop and make you all work harder, but take home the same pay.
Yeah, interesting. So I guess on the sell side, so people looking to prepare for an exit, is there anything that they can do maybe in the early stages of an exit plan, meaning a couple years out as they're making sure going through their checklist of what they're doing, or even maybe less organized folks that are maybe already in the selling process, to make it easier for buyers to understand, start, continue developing skills, and almost kind of, picking up where they left off and helping them, like, not only from a financial point of view, but truly understand that kind of the ethos of their company and the human capital just broadly.
Yeah. I would say encourage your employees to think about their future and what they want to get out of their career. Is it just a paycheck? Do they want to maximize that paycheck right now? Or are they investing in themselves as well and want to kind of like have career growth and grow their skill set? And if it's the latter, what are the skills that they're most excited about investing in? And be open with them about the fact that, look, one day I might want to retire. One day I might want to sell this company. And there's a fantastic book that I can recommend on the topic of having these difficult conversations. It's called Crucial Conversations. And it provides some really good, helpful tools for people who want to have these crucial conversations, but find that it might be difficult. Because a lot of company owners I talk to, they're fearful that if I bring up the topic that I might one day sell my company, then all my key employees will want to leave.
Yeah.
And I found that to be not true very often. Most often, if you have these crucial conversations with your key employees, they're receptive to it. And especially if you kind of like position it in a way of like asking them like, well, what is it that you would like to get out of your career? And how could this be a good transition for you? How can I kind of like help you to achieve what you want through that transition?
Yeah, that's really good advice, and thank you for the book recommendation. So this I guess kind of wraps up the questions and the interview portion of the discussion. Atta, I'd like to thank you, but also I'd like to conclude it by seeing, are there any questions that I neglected to ask, or any messages you'd like to share with the audience?
I think buying a small company can be a fantastic option for a lot of people, and to grow their career, grow their kind of like net worth. Be thoughtful about it. Don't get caught up in just having a fantastic deal, or just because there is a deal that seems unique to you. Take a step back and really understand where you could put your skills to use. And hopefully that can bring you a lot of success.
Great. Yeah, thank you for that. And where can people find you online?
They can go to our company website, eca-partners.com. That's ECA and then dash partners with an S.com.
Awesome. And I'll link that just below as well. Well, this has been a lot of fun. I really appreciate you carving out the time to speak with us today, shed some light on such an important and I would say often overlooked topic. Thank you so much.
Absolutely. It's been a pleasure. Thanks for having me.
Awesome. And lastly, thank you to everybody tuning in to today's webinar. If you have any more information about buying or selling private companies, check out our tools, resources, blog at Tresle.com. Further, any suggestions on future webinar topics, drop us a line at hello@Tresle.com. Thank you, everybody.
Thanks.
Thank you.